Let's get in Vineet Agarwal, President of Wipro Consumer Care and Lighting, to talk about how is business shaping up on that end. Thanks so much for joining in. The prima facie question would be, and you would have guessed it, the 26% growth in revenues. Is it something that can be sustained in the coming quarters? And if so, which segment would primarily contribute for the growth as well?
Good morning. This was a good quarter for us because, let's say, all our three cylinders fired. So whether it was our household business with Santur and Yardley and Chandrika, or whether it was our international business with Unza, that did well, and also our commercial lighting and furniture business, the institution business, that also has done well. So I would say that all the three have done well. We are not seeing the gloom and doom that people have been talking about. I think the consumer in this market continues to look for a great value proposition and continues to use everyday products like toiletries, etc. And in our institution business, I think what we've seen well is that our LED foray has done well for us, and our premium furniture, which is an international designer furniture, that's also done very well for us.
So, Vineet, one question really. One, whether this improvement that you've seen in revenues primarily, was it volume-led, or did it also have increase in price realizations? And two, would some of these, if there has been price uptakes, if they have come in, would they also translate into the margins, or the cost pressures are offsetting that aspect?
So if I look at, let's say, Santur, and the main ingredient there is palm oil. Palm oil has dropped relatively compared to last year by about 20%, but it's got partly offset by the fact that Indian rupee has depreciated. Compared to, let's say, last quarter, let's say July, September to October, December, the prices have increased. We've taken a price increase of about 5%, and there is a mix of volume growth as well as value growth. So if I look at Santur, it has grown volume by 16%, which by no mean terms is a great achievement. If I look at deodorants, there has been again a price increase of about 5%, but I would say that the Yardley deodorants now constitute close to about 60% of our business. And given the fact that the consumer is willing to accept it at that price point, and it's really going down to the small towns, we expect that growth to be reasonably robust going forward.
Where do you see incremental growth coming from at this point, and how are you looking at the future in terms of ensuring that margins stay at these levels or you enhance them?
If I look at margins, I would say that first is that we expect the commodity prices to be around this area. It's been a very difficult area to predict commodity prices, but our broad understanding would be it will be around this at least for the next quarter or so. So I don't expect any major changes that would happen from a margin perspective. Hopefully we should be able to maintain it. We've grown from 11% in quarter 2 to 11.9% in quarter 3. If I look at in terms of incremental growth, if I look at commercial lighting business, a clear single-minded focus is on LEDs. And we think that because the consumer, though he's paying a slightly higher upfront value, he thinks that there is a stronger value going forward. So a lot of offices are willing to do that for LEDs, a clear focus. And we have today lighted more than 60% of the green lighting buildings in the country today. In our furniture business, we sell a lot more of premium furniture than what we were selling earlier, and that protects our margin. But even in this economic climate, we are seeing that the consumer is willing to buy a higher value because she's not making an office, or he or she is not making an office for next 1 or 2 years, but she's really buying it for the next 10 years. So to that extent, I think we would have great traction in this area. Santur continues to do well. Our rural focus has done very well for us. Yardley has outperformed expectations. The challenges that we had of making it relevant for younger generation has been overcome, and the deos continue to outperform. That's constitute to 60% of our total Yardley sale. So we expect that to happen. Outside of India, Indonesia has grown 28%, Vietnam has grown 18%, China has grown 25%. So to that extent, our footprint has been in the right geographies, and these countries continue to do well. So we hopefully we should be able to ride we are confident of the future because we are in the right products in the right countries.
Okay, can you just give us a quick update, Vineet, on your update on, on your foray on infrastructure projects to strengthen your lighting business? Is this a near-term kicker as well that will come in, or is this a long-term strategy which will probably fructify maybe a couple of quarters down the line?
So, our focus on commercial lighting is on indoor lighting, which means all offices which come up. We do a lot of work with the pharmaceutical sector for the clean room fittings, for hospitals, again for clean room and for hospital beds. We do a lot of work with industry for factories. So our clear focus remains there. And as long as those industries do well, we would stand to benefit. What we are really doing is that we are coming up with products, especially in the LED areas, which will help the consumer to reduce maintenance, and it helps the consumer that it has a much longer shelf life. You don't have to replace it so often. And in terms of power usage, it is much lower. And given the costs of power going up, I think it's a great value proposition that we have. So in all the sectors that we are in, whether it's indoor lighting like large offices, whether it is pharmaceutical, whether it's hospitality, whether it is hospitals, or whether it's industry, in all the sectors we have clear LED products which can take advantage of the new construction which is happening.